Welcome back, traders. This is our Gold Weekly Review. My name is Angelo Zittis, and this week's title is Volatility Goes Toe-to-Toe with Risk. Gold prices were seen in a slump yesterday after the precious metal was overpowered by a stronger US dollar. In the previous days, a solid US employment report indicated unemployment dropped to 3.5%, a record low rate for the US economy that gave the greenback a boost. Also, on the US Sino front, negotiations, which are to start later this week, could be adding further volatility on gold prices. Main fundamental drivers. From a fundamental perspective, the most dominant factors that move gold prices are the ones that have the potential of increasing economic risk in more than one continent, as in the case of Brexit, but also in the case of the US negotiations with China over trade and the persistent weakening in the Eurozone. Traders and investors are looking to take advantage of gold volatility. On the US Sino front, we have confirmed talks that shows that the two sides are willing to exchange opinions, which eases worries somewhat. The two sides are currently dealing with small matters, and according to other reports, the more significant matters will be dealt with in a later stage, perhaps 2020. On the other hand, the US is still taking action against Chinese technology firms. Bloomberg released reports stating that the Trump administration had blacklisted a considerable number of Chinese firms, providing various excuses for this. From the Chinese side, they made it clear that any change in their laws to protect intellectual property is not for negotiation and will never be. Taking in mind the two pre-mentioned points, we understand the US Sino dispute could be nowhere near to being resolved. In our view, there is still some back and forth from both sides that could be described as retaliation. In this case, gold prices could be in for support, as the two sides are basically in talks, but in the background they are still throwing darts at each other. Any developments on the matter are expected to increase gold volatility. The most straightforward view could be that traders could purchase gold once economic circumstances coming from headlines or reports point to excessive risk. Gold traders trying to set up a plan that could help them throughout the week must have in mind the following events. First, we start with the FOMC meeting minutes coming up on Wednesday, the 9th of October. In the American session, many analysts are anticipating the meeting for any clues regarding the Fed next moves. Are they in for another rate cut, or is that enough? At the moment, market sentiment is leaning towards another cut. If this is the case, it could be signaling that the pressure in the US economy may persist, and gold traders and gold prices may react accordingly if this scenario would take place. Then we move to another significant driver for the US economy and its currency, the CPI inflation data. US inflation data is expected on the 10th of October, Thursday, in the early American session. This event may provide substantial volatility for the US dollar and so subsequently could affect the shiny metal prices, as the two have an adverse relationship. As per our closure, physical gold continues to be an attraction for China, even though the mainland had initially discouraged any unnecessary imports, which include gold. The ongoing depreciation of their currency may have led them to undertake the opposite scenario. Sources imply that 60 tons of gold have been imported to China from various countries, while the figure represents only August 2019. Could China in any way or other be lifting gold prices by fueling demand? That's a good question. Moving now to our technical analysis. This is gold 4-hour chart. Today, during the early European session, gold had shown bullish intentions and has managed to surpass the S1 1500 support level, even though in the Asian session it was trading approximately $15 lower. We have noted in previous reports, and we maintain our opinion, that the S1 1500 round number level remains a key level and even a psychological barrier. It has been tested many times in September and October. If gold is to rise even higher, then the next possible stop could be at the R1 1510 resistance level. A move higher could send the precious metal near the R2 1517.50 resistance barrier. And if the bulls are even more aggressive, then the R3 1525 resistance line is also possible. In the opposite direction, a move downward could send gold back to the S1 1500 support level and even lower to the S2 1488.50 support barrier. Now, during the previous week, the precious metal also tested the S3 1475 support line, according to our RSI indicator below our chart, which is currently running in between the 70 and 30 levels. Some uncertainty among traders is imminent. If you've heard something in this report that you found useful, make sure you apply it to your trading. That's the whole point. Thank you for your time. We wish solid trading, and we'll see you soon.